Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is 1980s movie quotes. We'll have some fun with that.
Ooh, I like that.
You like that? Okay.
Yeah.
Our special, actually, I think this week, yeah, some of these are pretty easy. Okay. All right. Our special guest this week is Brent Jarcik, who is an insurance agent. And I got to say that he just did some insurance for me and cut the premium quite down on a building I have. Brent, welcome to The Best of Investing.
Thanks, Edward.
Okay,
so I just wanted to talk a little bit about the insurance marketplace today,
Okay.
and a little bit about what I do. Anyways, the state of the insurance marketplace, kind of 2 areas, personal lines and commercial lines.
Okay.
So we're talking just about property and liability insurance today, no health insurance or anything like that. But personal lines, as you can imagine, in California is getting tough. From the standpoint over the last 5 years or so, there's been a number of fires, Paradise, Santa Rosa, Malibu, and Montecito down near Santa Barbara.
Yeah.
So, and in addition to that, about 5% of the state of California burned last year. The state of California is about 100 million acres, and just under 5 million acres burned. So
Wow.
the insurance companies over the last 5 years are really feeling the pinch. And from a personal line standpoint, they have raised rates, yes, some, but what they've done on the personal line side, because it takes so long to raise rates, when insurance companies want to raise their rates, they can't just raise their rates. They have to go to the Department of Insurance and actually get approval. So they have to open up their books and say, hey, we've either been making a profit or making a loss, and we want to take this much of a rate increase, and this is why. And that process takes about 12 to 18 months. So instead of, going through that process on the personal line side, what they've done is they've just kind of cut back on the territories that they're willing to write in. So, which obviously a lot of people have been seeing that with non-renewals and stuff like that. And the personal lines insurance companies have been able to get some rate, but again, most of it has been just trimming back how much capacity that they have.
Well, let me ask you, Brent, let me ask you on that. It's almost like closing the barn door after the horse has left. I mean, not that, if you have a fire in one area, you're not going to necessarily have it. I mean, you won't have it on the same house, but, you'd think that they kind of would, like I'm thinking about the coffee park area. I mean, that burnt pretty darn well so that, I don't know how much is even left to burn. I mean, it took a couple of years for the vegetation to grow and the PG&E lines got fixed theoretically, right?
Yeah. Well, I mean, there are some parts of Santa Rosa, like Annandale, that have been hit multiple times over the last 3 or 4 years. So, and I think the insurance companies didn't realize what they had on their books. I don't know if they'd been a little bit lazy or what, but they just, they hadn't seen events like this since the late 80s with the Oakland Hills fires.
Oh,
right. So
1991.
Yeah. So there you go. And they hadn't seen any events of this scale or this size in a long time. And I think, kind of the buzz of global warming and stuff like that had been out there, but, they had no actuarial data to kind of back up that, these things were going to get bad. And then once Santa Rosa happened, it was kind of like, oh, geez. And then, PG&E starts shutting off the power. And then I think, a lot of people are like, oh my gosh, this is real. And it's not going away anytime soon. And, just with them being in the red and stuff like that, they just decided like, hey, we need to really change course here and do some stuff differently. And then, the next 3 or 4 years have just kind of confirmed what, kind of Santa Rosa had already put in their minds.
Yeah.
Anyways, with those 2 fires. So
that's really interesting because, I mean, it seems like lately, not only with fires, but with climate change or sea level rise, these are situations that, I mean, I hate to use unprecedented again, but you hear it so much, but that insurance companies never really had to deal with on such short cycles.
Yeah.
So, from the fire, like you were saying, Edward, Coffee Park is burned down. The likelihood that it's going to burn again is really low, and same with Fountain Grove or other areas. But what you're saying, Brent, 5% of the state burned. How much of percentage of the state is forested like that 5%
Good point.
that has, the
Yeah.
the probability or likelihood that it'll burn? That's the scary part to me.
And then forest management is one thing. Hey, Brent, you know what? Stay with us. We'll let you answer that question when we come back from break. All right. Our first trivia question is talking 1980s movie quotes. And Brent, if you know the answer to this, don't say it until we get back from break. All right. This quote comes from this movie here. Looks like I picked the wrong week to quit sniffing glue. You remember that? Okay.
Yes.
What movie was this? And a little bit of bonus points if you can guess the character who said it. All right. The call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. All right. Again, that question is, looks like I picked the wrong week to quit sniffing glue. All right. I want to make a mention here for the Mount View Hotel in Calistoga. Live life at the Mount View Hotel in Calistoga. Every afternoon, they enjoy vino and vinyl wine tasting, and on Fridays, Saturdays, and Sundays, join them for dinner and a movie on site as they've remodeled the location to accommodate outdoor movie theater. When you're ready for a change of scenery, make yourself at home at the Mount View Hotel in Calistoga. Making memories for 100 years. That's the MountViewHotel.com. Stay with us. The Best of Investing will be right back. Well, welcome back to the Best of Investing. Edward Brown here, along with Nam Phan and our special guest, Brent Jarcik. First trivia question is, looks like I picked the wrong week to quit sniffing glue. What movie does that come from?
Airplane.
Airplane. You remember who said it?
It was the older gentleman. I can't remember his name now, but
yeah, it's funny. I kept thinking it was Leslie Nielsen, but then I remembered, no. It's the guy who did Sea Hunt, and his son was in. Yeah. Lloyd Bridges.
That's right.
Okay. Yep. I just remember that. Okay. So our special guest is Brent Jarcik, who is an insurance agent. And Nam, you wanted to, why don't you ask that question again?
Yeah. So Brent, in the last segment, you were talking about the fires in California and how 5% of the state burned last year. There's, and that brings up something we talked about at the end of the last segment, which is, how much of California is forested in the same way that like Paradise. How many communities are like Paradise in California that have, accumulated all of this tinder because of poor forest management, drought conditions, heavy rains followed by drought conditions. So there's a lot of growth that, hasn't been cleared out. So the possibility or probability of more fires like the ones we've had is really high. So how do insurance companies deal with that? How do they?
Especially with the lack of rain.
Yeah. And kind of what the insurance companies are looking at is, more people are starting to move out into these forested areas, in between that split between urban, suburban, and then really getting out into the forested areas, whether it be kind of wineries and stuff too, that are kind of out in hard to reach places. The insurance companies rank the insurance scale 1 to 10. 10 being the highest, 1 being the best. So 1 would be like downtown San Francisco or LA, where there's a fire hydrant within 1,000 feet. There's a fire station within 5 miles. And so normal protection classes are like 2 and 3. And then at the other end of the scale, you have 10, where, it's maybe an ag type property or a home or a ranch where that it's not within, 5 miles of a fire department or 1,000 feet of a fire hydrant. In those situations, they're looking for like swimming pools or ponds, that they could tap into. But we're finding that more people are moving into these forested areas that are kind of further off the beaten path. And so, anyway, people are moving into these areas, and they're more high prone fire areas that are harder to protect in the event of a fire. So, insurance companies are seeing that, and it's kind of been a trend over the last, 10, 15 plus years, that people want to be more in nature. They want to live in these areas. They want to have more space, but it makes it harder now to insure those properties. In the past, kind of before Santa Rosa, the insurance companies didn't really think too much about insuring those. But now, like they have a red flag to those types of properties. So People are finding it hard to place insurance in those areas.
You know, I was just reading an article that, you know, PG&E is asking for a rate increase from the PUC because of all of the liability that they had from the fires. And then part of the article, though, was explaining how some of the high executives, though, were getting these huge bonuses. Thinking, I hope the insurance industry isn't doing the same, you know, because it's like, I mean, if they're profitable, that's one thing, but if they're asking for a raise based on issues that they've caused. Now, the insurance industry didn't do that. You know, PG&E maybe caused fires. The insurance industry did not. But it still would be a little odd for them to be asking for huge raises. I don't know, is that happening? Are there big executives in the insurance companies still getting big bonuses?
Not that I'm aware of.
Okay, that's good.
Yeah.
So, with, you know, if I'm looking to buy a ranch in an area that's heavily forested, you know, it sounds like it's still possible to get insurance. It's just harder to get insurance. So, should I reach out to you?
Yeah. Definitely, and even we've had a few examples recently where we had, you know, ranch type properties where, you know, maybe somebody has a hobby farm or something like that, where some vines or some grapes, you know, on 10 or 20 or 30 acres. And even we've seen the price go up substantially. I know we had a seller of one property who would have been non-renewed in the situation anyway. I think they were paying like somewhere in the $7,000 to $9,000 range. And the other end, the buyer ended up paying like, you know, over $30,000 for the same insurance, but maybe even lesser insurance. But that just shows kind of where the marketplace is shifting. And the seller was coming out of a kind of standard product, and the buyer ended up having to go into like a non-standard product, like a Lloyd's of London type situation where, you know, we don't typically want to go to Lloyd's of London first.
Sure.
But after we've exhausted our standard lines companies, the Travelers, the Hartfords, Liberty Mutuals of the world, if they're not able to do it or don't want to do it, then we would go to Lloyd's of London second, or those type of surplus lines companies. And then after that, if they can't do it, then Fair Plan would be a third option.
Wow. So, I mean, so let's say I could get a policy. It was really expensive. Could I do some mitigation work to get that policy down?
Good question.
If you're with like a Lloyd's of London, yes, there's some possibility of that. With Fair Plan, the rates are kind of what they are. But even with Lloyd's type products, you know, they're still, I mean, it's hard. They'll come out and they may do some inspections and they may say, hey, trim back that tree, you know, that it's within, you know, 5 feet of the house, or, you know, hey, there's some vegetation growing over in that area of the property, like cut that back. And they'll make recommendations, or part of the underwriting process. They'll ask for photos and stuff like that. You know, or some more communities are becoming like Firewise communities and stuff like that. So those are definitely positive things to do. And any preventative steps that you can take will obviously help in that process.
They're actually, where I live in the hills, they actually have sent us an email that said, you're going to get fined by the fire department if you don't do this. And I don't think it's overreaching, because everybody should be protected, you know, because if a fire happens, and, you know, it's going to hurt everybody. Let's put it that way. So it's just being a good community neighbor.
Exactly.
Hey, Brent, before I forget, how do people get a hold of you if they have questions about insurance?
Yeah, the best way is to reach me is by phone. And our office number here is 415-898-7114.
Okay. All right. And then let's see here. We're gonna cut to another break. When we come back, we have a little bit more talk about insurance, and then we'll move on to NOM.
I think in the next segment, I'd like to talk a little bit about the Florida condo market. With the
that's a good one.
On that too.
Yeah, very good. All right, here's our second trivia question. Talking 1980s movie themes. Life moves pretty fast. If you don't stop and look around once in a while, you could miss it. That's kind of tough. That might be tough. Do you know that one, Mom?
No. Say it again. Can you repeat that? Let me think about that.
Life moves pretty fast. If you don't stop and look around once in a while, you could miss it. Kind of. It's you won't get it from that. That one's kind of tough. But anyway, call 888-912-1190. First caller with the correct answer going to win that tanning certificate. Stay with us. You're listening to the Best of Investing. Don't touch that dial. We're going to be right back. Well, welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Nam Fawn of Pacific Private Money and Brent Jarcik, our special guest. Second trivia question. Life moves pretty fast. If you don't stop and look around once in a while, you could miss it. That one's kind of tough. Ferris Bueller's Day Off.
Oh, okay.
He says that to Cameron, I think he says it too.
Yes.
Let's see. Well, also want to make a quick mention here for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. Check them out. Awesome pizza. Okay. Nam, you want to ask about the Florida condos?
Yeah. So this is along the insurance line, but also real estate sales in general. So the article this week, I think it came from Inman News, but should we sell? The question. After collapse, hot Florida market faces uncertainty. And that's specifically in the condo market because of what happened at the Champlain Towers south in Surfside, Florida. If obviously, I think everyone should know about that, where the condo collapsed, essentially killing, probably at this point, it's going to be well over 100 people. But there's still quite a few missing.
Yeah, it's fine. I obviously read about it and heard about it and all that, but was it a defect in the construction?
I think it was a combination of things, but essentially, I think there was a lot of deterioration and maintenance that needed to be done that, according to, I think, some engineers, they had recommended work to be done. And I think work was supposed to start on some of some of the issues that were brought up. But essentially, it's a 40-year-old condo or 40-plus-year-old condo that had some damage due to just being, in Southeast, in a seaside community specifically, where there was just some damage or just older structures, concrete work that essentially gave way. And so what it's causing is, definitely uncertainty from people who want to buy into that market now.
Yeah.
Because they're saying, how many older condos like this could be subject to this kind of sudden collapse?
Yeah, good point.
So would I want to buy a condo in South Florida right now that's 40 plus years old or 30 plus years old and take the chance? I'm sure everyone's extra careful now, but you have to imagine that in this article, they talk about how that whole section of inventory has just dried up in terms of interest. So where people now are asking, hey, has this property been recertified? Where that was never or hardly ever a question if you were a buyer buying into a condo, that wasn't part of your vernacular. But now that, now that this collapse happened, that's totally drying up the condo market for these older condos. Then going forward, I mean, if you're an insurance company, or if you're a buyer and you buy into this, are you going to be able to get insurance? How quickly? So my question, Brent, is how quickly do insurance companies look at situations like this and say, hey, we're not going to sell policies on these condos that are 40 plus years old? Or does it take time for them to figure that out? Or is that something that, the insurance industry is going to quickly, make a decision and say, you know what, let's not issue any policies yet until we learn more about what's going on?
Yeah, definitely. I have seen a couple articles so far, and there hasn't been any adjustment quite yet in the marketplace. They're kind of looking at this as a one-off. But I think as time goes on, probably, and the insurance companies do inspect as part of their process.
Yeah.
Maybe they'll be more thorough, or they'll do other types of things as part of their inspections. Maybe a more detailed type engineer with somebody with a real engineering background. Before they were kind of looking at, all right, is there, cracks in the sidewalk and stuff like that, or, just making sure that the elevation or the elevator certificate's in place, those types of things. They were looking at the roof.
Mm-hmm.
I don't know how concerned they were. I don't think they were very concerned about, the overall structure of the building. Most people think a 40-year-old building, built of concrete and steel, is supposed to last a pretty darn long time. You see buildings from the 20s and 30s and even before that have been around a lot longer and don't typically have those types of problems. So, I think it is something that the insurance companies will focus on going forward. But right now they haven't completely put the brakes on it. I think they just want to see how things play out. But if something else were to happen, another building were to have similar type situations, just with the fires in California too, I think you would start to see quite a few changes if something else like this does happen again.
Yeah, and that makes sense because, this hasn't happened to this extent, degree, or, that I can remember in recent times. So, the probability of it happening again, I have to imagine, are pretty slim, but obviously this is tragic and it's going to make people, look at buildings of similar construct and time, take another look at it. But I have to imagine, it's probably don't want to take a knee-jerk reaction, but, ultimately right now, buyers who are looking for these condos are in this article they're underbidding. So they're saying, what, if I'm going to buy, I'm not going to buy at full price because I know there's going to be less demand for these. Or this article also cites that people are just deciding not to buy on the coast altogether, and some are moving, just looking inland, where there might be less risk to coastal, weather or conditions. So that's interesting. I printed this out without really thinking about the insurance side of it, this article, just from the real estate, sales standpoint, but those two go hand in hand.
And I think one thing too that kind of came out of that in the article that I was reading from an insurance standpoint is, just how much insurance was in place, from a liability perspective and also from a property perspective.
Mm-hmm.
How much would it take to rebuild that building, in the event of a total loss? And how much liability coverage do you want to carry, and how much directors and officers coverage do you want to carry, for those few that sit on the board of directors and are making decisions on behalf of the masses, how much coverage do they need to protect themselves because they're volunteers, for the most part. So,
interesting.
Anyway, just making you have enough coverage in all three areas, property, liability from the whole HOA's exposure, and then also directors and officers for those, the people who sit on the board and are making decisions on behalf of everybody.
Hey guys, we have to cut to another break here. Brent, why don't you give out your information one more time?
Yep. Thanks, Edward. The best way to reach me is at phone number 415-898-7114.
Very good. Thank you. Okay, here's our third trivia question. 1980s movies. It seems to me the only thing you've learned is that Caesar is a salad dressing, dude. Call 888-912-1190. First caller with the correct answer wins that tanning certificate. I think the last word gave you the end. All right, stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. Edward Brown here along with Nam Phan and our special guest, Brent Jarcik. Third trivia question. It seems to me the only thing you've learned is that Caesar is a salad dressing, dude.
Brent, do you want to take a crack at that?
What movies that come from?
I'm not sure. Yeah, you got me on in that one.
Okay.
I think it was before your time. Is it Fast Times?
No. Oh, yeah, I know why you thought that. No, Bill and Ted's Excellent Adventure.
Oh, man.
Come on, another one.
Before my time.
Okay. No, you want to ask one more question?
Yeah. So, Brent, on that last segment, you brought up something that was interesting that I never really think about with insurance. And we were talking about the condos and whether or not they have enough insurance to cover, replacement costs. But then you were mentioning, also you have to look at whether or not the directors, who are volunteers in many cases, have insurance. So, is that something that you provide, your company provides, is insurance for actual directors or leadership, some of the executives who oversee some of these, these communities?
Yeah, that's definitely something we provide. We're a brokerage, so we're not tied to one insurance company and the products that they sell or they have, but we're a broker, so we represent everyone from like Travelers, Hartford, Liberty Mutual, Nationwide, and we sell all the products they have. Plus, anyways, most of those are focused on property and liability, but we also have companies that specialize in directors and officers, professional liability, cyber, employment practices. So all those professional practice policies too.
Wow. Yeah. Well, you don't think that's needed, but that's definitely something that I would, anyone in that position should be considering, especially now.
Yep.
Okay. Well, Brent, thanks again for joining us on the Best of Investing. We'll have to have you on again. All right.
Yeah. Thanks for having me, guys.
Brent.
All right. So now we're going to move on. Nam, let's get right into email time here. Email comes in and says, if I invest in your funds and need my money back, how long does it take to redeem? Good question.
Yeah, great question. So essentially the emailer is inquiring about redemptions of their investment from one of our funds. So we have 4 funds here at Pacific Private Money. First one being our legacy fund, the Pacific Private Money Fund,
Okay.
followed by the Pacific Freedom Fund, Pacific Southwest Note Fund, and the North Star Capital Fund. So when you invest in our funds, there's typically a few things. One is a hold period, which is supposed to be a minimum time frame for staying in our fund. And once you're beyond that hold period, then there's a redemption where you can make a redemption request. And that redemption, depending on which fund you're in, that redemption time frame can vary between, let's say, could be as less than 2 weeks to maybe 6 weeks or so on average. So depending on which fund you're in, that will determine the redemption period. So specifically for the Pacific Freedom Fund and the Pacific Southwest Note Fund, the redemption period, I'd say for the Freedom Fund is about 2 weeks. For the Southwest Note Fund, what would you say, Edward? Is
about 2 weeks also.
2 weeks, okay. Yep. So for those two, it's about 2 weeks. And the reason why we can process the redemptions fairly quickly is that they're fairly highly liquid funds, meaning that there's usually some capital in the fund account that we can use to process redemptions, just because typically there's a lot of transactions occurring where we have the liquidity. Transactions meaning we're selling loans or loans are getting paid off. For the other two funds, the Pacific Private Money Fund and the North Star Capital Fund, that can be anywhere from 2 weeks to 6 weeks. It just depends on the availability of capital. And the reason why there's a greater potential longer period of time for redemptions is both those funds typically try and hold those loans to maturity, meaning that it's not, in those funds, you don't want to have the funds necessarily liquid because then it's not earning capital.
True.
But typically, now that the funds are at the size that they are, there's always transactions occurring where a loan pays off, or potentially we've sold the loan, so there's capital back in the fund. And when that capital's there and there's a redemption request, then that shortens how quickly we can redeem somebody their investment capital. The other part of it too is how much you are looking to redeem.
Yeah,
so,
really, 100,000 is different than a million.
Yeah.
That's
so, whenever we get a $100,000 request, $50,000 request, we can process that pretty quickly.
Yeah.
Today, we have, between our four funds, we have, well over 100 million in capital in our four funds. So we just have more available capital to, number one, to make loans, but also to make redemptions. So
good. Give us a deal of the week. I'm sure you've got one.
Nice.
Nice try to trap you.
I was going to ask you a deal of the week. And actually, I'm going to cite an article which will kind of lead to several deals of maybe the quarter or year, some of the common deals we have. But let me cite the article, and then it'll lead to the deal of the week. So here's the article title: Why Baby Boomers Have Such a Huge Influence on Real Estate Trends. So isn't that your generation, Nick?
Which one?
Baby Boomers?
Baby Boomers, yeah, I'm toward the tail end.
Tail end,
yeah.
You're close to Gen X, huh?
Yeah, close. Yeah.
So the article cites, their influence on both the rental market and the sales market. And again, this is talking about baby boomers. It says, while one subset of baby boomers is flocking to the rental market, another is hesitant to sell.
Okay.
So what they're referring to are essentially right now baby boomers who are in a home and either are selling and then moving down into and renting. They're pulling cash out of pulling the equity out, and they're just becoming renters in the later stages of their life. And how that influence is pricing out some of the younger generations from some of these rental opportunities.
Oh, yeah.
Because the boomer generation has 59 trillion in generational wealth.
Wow.
Right now. 59 trillion. That's huge. Come on, Edward.
Yeah. I'm 0.000000001% of that.
Well, so I just pulled out a calculator.
Yeah.
Okay, so 59 trillion in generational wealth. That's incredible wealth with the boomer generation. Millennials, on the other hand, only have 5 trillion. Obviously, they're younger, so they have some time to accumulate. But that's a huge disparity. Yeah. And so with the boomers having this sort of disposable income, they're and they want to rent. For those who want to rent, they're outpricing some of the millennials, and so they're driving up rental rates in some of the attractive areas. That's one area where there's a huge influence on real estate, and that's the rental market. The other part of it, and this is where kind of Pacific Private Money comes in, is there's a huge group that are hesitant to list their homes. And the reason why, this is something we talk about, is that they know in this market they can sell their home quickly. They don't know where they're going to move to because of the same, dynamic. As a seller, they're king of their castle. They can list their home today and will probably get 10 offers tomorrow. But if they are looking to go buy, they know they're going to be competing against 10 offers. Mm-hmm. And so they're hesitant there, hey, I can move, but I can sell, but I don't know where I'm going to move to.
Tough.
If they're planning to buy their next place. So that's a dynamic that has a tremendous influence right now on real estate activity. And so for that reason, we're seeing more activity in Pacific Private Money.
Very good. All right, stay with us. No trivia question, but the best of investing will be right back with some closing comments. Don't touch that dial. Welcome back to the best of investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Hey, I also want to make a quick mention here. The Transcendence Theater, they're having their performances outside at the Jack London State Park. I don't know if you've ever been there, but it's a very, very nice venue. Check them out. Transcendence Theater. I think it's called bestnightever.org. They do a great job. All right.
Awesome.
Yeah, check them out. So, Nam, you wanted to finish up about the boomers.
Yeah, I just wanted to finish up on that article. And what I was talking about in that last segment was that, boomers have a tremendous influence over real estate trends, and specifically, those who are holding off on listing their home because they don't know where they're going to go next. And that kind of leads into not a specific deal of the week, but a lot of the deals that we're seeing these days, which are bridge loans, where a older couple are downsizing. And they are wanting to buy their next home before selling their current home for that exact reason where, if I know I can sell my house quickly, let me go find the house I want to move into first because that's more important. Yeah. So they're using us and our bridge loan product so they can make an offer on a home that's doesn't require a sale contingency. And a sale contingency is essentially, a contingency that means, hey, I'll buy this house, but as long as I sell my current home first.
Yeah.
And
that fly.
Yeah, that doesn't fly in today's real estate market. It's too hot. So if you're out there and you want to downsize or you just want to buy your next home, then you have to be able to make a non-sale contingent offer to really have a chance to win in a multiple offer situation. So our bridge loan is one way to do that or help solve that. And essentially that's a loan on the property you're buying. And doesn't require you to sell your current home first, and allows you to make a non-sale contingent offer. Once you get into your new home, then you can list your current home, and obviously, in this market that could sell pretty quickly.
Yeah.
You use the proceeds to pay us off and refinance into a long-term loan. And if more boomers knew about that, well, really anyone who has to sell their home or wants to buy their home, the next home first. They knew about this bridge loan that can help really create that opportunity and also just create more inventory, which is short right now.
Absolutely. And to go back into your funds, questions about that. There's no fee to get in, no fee to get out. So there's no load.
Yeah, right? Exactly. And to learn more about our funds, give us a call at our office here, 415-883-2150. Or you can go online, www.pacificprivatemoney.com, and learn about the different funds that we have. And from there.
Yeah, you've been doing some webinars fairly recently, and I think you had a pretty good attendance last time. You have another one planned?
Not for a little while. I think the next one we'll do is in September. Take a break for July and August, but we'll get back to the webinars in September, and excited to be doing those again. I'd like to do them in person, so maybe.
I know. Yeah, we got to figure out a way to get us all together in person again.
Exactly.
Brent Jarcik and I go to a monthly brokers meeting that meets at McGinnis.
Oh, is it back on?
They finally, yeah, this last Wednesday was the first time. You got to love that bacon.
I was going to say, man,
yeah, but
look out, bacon.
Look out, bacon! Here we come.
Coming.
Yeah, but for a year, I mean, ever since March, I think March 1st or something was the last one of 2020. So it had been a year and a couple of months of just Zoom. Yeah, that's pretty tough, you know. All right, again, give out your information one more time, and then we'll give our thoughts for the day.
Yeah. So phone number 415-883-2150. Or go to our website, www.pacificprivatemoney.com. And if you want to learn about investing with us, there's an invest tab at the top. If you want to learn about borrowing from us for the bridge loans, there's a borrow page as well. We talk about the bridge loans too.
Very good.
And other private money loans that we do.
Very good. All right, here's our thoughts for the day. Why do green beans meditate? To find inner peace.
I
like that one? It's one of those dad jokes. Okay. And why can't you trust large trees?
Why?
Because they're the shadiest ones. All right. We got a laugh out of you there. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.